What's up guys, welcome back to DeFi Chronicles. In this video we're going to be reviewing Ref Finance, a pretty interesting project built on the new protocol. They are the main DEX built on the new protocol, and not only that, they're the largest project on the new protocol. If you make the comparison, they're 5x bigger than the second largest project built on the near. So I'm pretty excited about this project. I want to show you some really important facts, some really cool metrics and stats on why I decided to start accumulating this project around 2 weeks ago. So let's go straight into it. A quick introduction: Ref Finance is a DEX. So basically they have the features of trading, swapping, liquidity, pool, and also some staking. So pretty normal for a DEX, but the stats are what are impressive, and also some facts. The project is built by the co-founder of Near, so that is a good thumbs up. And also they've been having some really good trading volume of $5 to $10 million on daily trading volume. So you guys know that Near protocol, even though it is a big blockchain, they don't have the same amount of volume like Matic, like Ethereum, AVAX, and even then with current market condition, Ref Finance is pulling $5 to $10 million in trading volume, daily trading volume. So that is pretty impressive. Let's go and let me show you some important metrics. So if we go to CoinGecko, you guys can see that the current price is 12 cents. The circulating supply is 21 million, but the total supply is 100 million. Now, I want to make a quick pause, is that circulating supply might look bad because there is only 21% of the circulating supply unlocked. But later in a few minutes, I want to show you the tokenomics and why I still like the project and why it is still impressive, even though there is only 21% of the circulating supply. Also, we have the market cap of $2.6 million, which is pretty good. And now what I want to say and what are the comparison and why I'm liking the project is, if we look at other information, like for example, if we look at Ethereum and their main DEX is Uniswap. Late 2020, Uniswap was trading between $1.5, $2, and the all-time high is $44. So there is a X or gain X or percentage gain of around 30x. If we use SushiSwap as an example, late 2021 to 2022, you could have made a gain of 50x. If we go to other projects like BNB and look at Cake, which is the main DEX on Binance Smart Chain, there is a gain from 2021, late 2021 up to 2022. For the all-time high, there is a gain of 200x. Again, if we look at Joe, which is the main DEX on AVAX, there is also a gain of 100x from late 2021 to 2022. So what I'm looking at is that usually when we invest in the main DEX of this type of project, there is a serious gain of 40, 50, 100, or even 200x. Again, why I do like the project is that Near Protocol, I don't think we've seen the best days of best years of Near Protocol. I still think they can continue to build, and I am betting that for 2024, 2025, if they continue to build properly, if they continue to add developers, if we continue to see good protocols built on Near Protocol, we should see Near Protocol shine. And if Near Protocol shine, we need a DEX for trading all these new protocols that are being built onto the blockchain. So if we take a look at the chart here, you guys can see that we started trading between $3 to $5, and in a few months we reached the all-time high of $10, which is, we can see it here, $10.64. Again, I was saying before that we can see that Uni made a 30-40x in just a few months. Cake made 200x. Joe made 100x. Sushi made around 50x. If we look at this, the difference is that we made only 3 to 4x gain. So I don't think we've seen the best of Ref Finance. Again, let's take a look at the metrics. So here we see that 2.6 million is the market cap and the total value is 61 million. So let me show you how big this is. If we go to DeFi Llama and we look at Near Protocol, you can see that the total value log on Near Protocol is $78 million. Now, if we go to the rankings, you guys can see that number one is Ref Finance with $61 million. So basically there is no Near Protocol without Ref Finance. You can see that the second largest project is 14 million. So right now we have a 4.6, 4.7x on the second project. Third project is 13 million and fourth project is only $4 million. So that means there is a 15, 16, 17x TVL on the other project. Again, if you don't know what TVL means, just a quick example. Let's say I have a protocol that is called DeFi Chronicles or Max protocol, and I have 10 Ethereum locked into my protocol. Each Ethereum right now should be between 1.2k, 1.3k. So if I have 10, I have a TVL of 13k. Hopefully that makes sense. So this is how big this is. If we click on Ref Finance to look up the TVL, show you. So we have 61. We started in August. You can see we had a few million. Then we went to 50, 100, and we stayed there for a few months. So between 50 and 100. Then we moved to 277, I think is the top around here. And then this happened, which is DCB is the central bank. They are the one that started with USN. USN is the stable coin on Near Protocol. There was a problem. There was a 40 million collateral gap, and they decided to shut down the project. I'm going to be linking an article on the shutdown of USN. It is not my article, but it is pretty good and very short, explaining why this happened. So they decided to remove the liquidity on Ref Finance. So that's why you're seeing from 200 million, we're down to 69 million, more or less. Now, if we go to the chart and analytics, let's see. So TVL here, you guys can see from 100 to 61, which is today 68 more or less. We can see the average volume. So 7 days are 1.7, 2 million, 2.2, 3.57, 2.98, and 1.26. So more or less the last 7 days, last week, we have been having between $2 to $3 million in daily volume. If we click on all, guys can see that the average is really between 5 million. As you can see, 5, 2, 7, 10, 12. We even had some crazy days with 131, 160 million, more or less. So even if we take out those crazy days with 100 million, 150, we are still at an average of 5 to 10 million dollars in daily volume. The top tokens on the protocol are USDT, USN. Yes, I know the project shut down, but you can still use it. Also, I think from the article that I read is that you can claim, if you have some USN, so let's say you have 100 USN, you can claim a 1-to-1 ratio to USDT. So that's why probably they still have some USN. They also have some Wrap Near, USDC, Ethereum, Ref, Near X, Wrap BTC, some Sweat coins, and ST Near. So these are the top 10. You can go down on the list to see all the other projects. Also, we have some top pools. We can see the TVLs, 20 million, 16, 7, 3.5, 1.8, 1.61. So also, I wrote a small article on Ref Finance, so if you want to check it out, you can. It is not published on any other platform, so this is one of my notes. So I'm going to be adding the link so you can check it out. But again, this is not public. I'm just sharing it with you. If you like it, check it out and let me know what you think about it. So we have the intro here. How big is Ref Finance? I was talking about the pool and tokenomics. So here, what I was saying is that they have 21% unlock, which kind of looks bad. But if we go here, you guys can see that tokenomics name, ticker, ref, fixed supply is 100 million and IDO only 2.5 million. Now, what I usually like to say is that not all all token release are created equal. That means if I have 60%, 50% of the token supply going to investors, that is a bad decision, because me as an investor, what I am looking for, my main goal is to make money. So if you give me 50% of the token supply, it is unlocked. What I'm gonna do? Cash out. I just want to make some money. Just cha-ching. I just want to make some money on the project. So when you change it, instead, as we can see here, 60% goes to liquidity, which is pretty good because they are a DEX. They need liquidity. They need liquidity for faster transaction. They need liquidity for cheaper transaction, and also make it available for all the traders and all people that want to get into refinance. We can see that they have a release schedule of 25% first year, 18%, then 11%, then 4.5%. Treasury, 20%, development fund, 10%. Airdrop, early airdrop, 1%, that's good. Future airdrop, 2%, and IDO, so the first investors on the project only got 2.5% on the token supply. Pretty good. So we have REF token liquidity provision, 2.5%, and some other airdrop of 2%. So pretty good. We can also look at the token utility, so you can make some revenue, staking the REF finance. There is some pooling, some farming, boost farming, and also some governance. Again, governance is not something that I'm interested in. Maybe some of you are. I'm invested in so many projects that I'm not really interested in taking my time in reading all these proposals and taking votes. So I actually do not care. Here we have the team. As I said before, the co-founder of Near Protocol is the founder of REF Finance, so that is pretty good. Here we have some team members, some investors, and some price action that I'm gonna be talking about in just a second. So here we have the website, REF Finance. You guys can click on launch app. Let's see what we can find here. So we have swapping, sauce, pools, farming, XREF. So XREF is the staking of REF Finance. If you stake the token REF Finance, you will be getting XREF as a reward. The good thing is that they are not minting XREF just because they want to pay the rewards. Those minting comes from the fees generated by the protocol. So let's say they make $5 million in daily volume. They make 1%, just using a crazy number here. They make 1% from that $5 million trading volume. Then they can use some of that money to do some minting, some buybacks. As you can see here, they've been purchasing 1.3 million REF in buybacks, which is pretty good because that is 5% of the circulating supply. So that means the more people that uses REF Finance, more money goes back into the protocol as purchasing the same token, so stabilizing the price or pushing it back. Let's see what other information we have here. I want to show you the price action. So if we click here on max, as I said before, all-time high is 10.64, and right now we are at 12 cents more or less. Usually what I like to do is to calculate it as if the price goes back to all-time high, how much money can I make? What is the gain that I can be hopefully waiting for? So if we see here, all-time high is 10.64. Let me show you. So 10.64. If we divide it by the current price, which is 12 cents, we have a chance of making 88x. Again, why I'm showing you this is that when I first started with the introduction, what I said, Joe made 100x. PancakeSwap made 200x. Uni made 40x. Sushi made 50x. So what are we seeing here? 88x is between the parameters of the amount that the main DEX usually makes. So again, we only made like 2 to 3x from inception. What I am seeing, or what I'm expecting, is that now that we are at a crazy low price and at only $2 million market cap. So if you make the comparison, they have $2 million as their market cap, but they have in TVL 61 million. How I see this is that, let's say for example, I'm purchasing a house that the price is $100,000. Okay, cool. I pay $100,000 for the house, but when I open that door, I see that there is $150,000 in furniture inside that house. Yes, that is not the price of the house, but I have $150,000 in furniture inside of the house. So that's why I really like when I see those crazy TVLs way higher than the market cap, because that means if it goes a 1-to-1 ratio to the TVL, that means, hey, we could see a 25x gain on this. And usually people like to look at the TVL and compare it to the market cap. So that's why I'm showing you that information. So again, so price action, what I'm seeing is that if it goes back to all-time high, there is a possibility to hitting a 80 or 100x. Again, if you invest $1,000, I am not saying you should. What I'm saying, if I invest, if I do it by myself, $1,000 by 100x, that is $100,000. Probably I would not wait until I hit 100x, but again, that is a massive gain. So now let's look at some other information on the project. So I explained the staking. So the staking here, you can see how they create the pool fee. So here on this picture, you can click the link, and we have also some conclusion. So let me go back to the chart here. We have the stats. We can see some of the top tokens. So what I didn't say is that the top tokens are some stables. So they are stable coins. The good thing is that if you have more stable coins, the TVL should be more stable, because if the price of a token starts dropping, also the TVL will start dropping. But instead, if you have stable coins, then the TVL should be a little bit more stable. Let's see what else we have here. So yeah, so basically, if we do the conclusion, why I do like the project is that, first of all, the average volume is crazy. $5 to $10 million for me is crazy for a protocol that is not even, like there is not a lot of transaction. I haven't seen a lot of people telling me, hey, there is a cool project built on your protocol, go check it out. No, usually those projects are built on AVAX, on BNB, which is extremely active, Matic or Phantom. So seeing $5 to $10 million volume on only one DEX, that is pretty good. The TVL is 69 million with a market cap of only 2.6, only 2.6. And also, if Near Protocol continue to work as they have been doing, they continue to add more projects, they continue to add more protocols, we need a DEX to trade all these tokens. So what is the main DEX? Refinance, you got it. So as more protocols are built on Near Protocol, they need a DEX. So all these tokens are going to be traded on Refinance. This is how I see it. So the more money that is flowing in Refinance, more money they have to buybacks, and more money and more people using the token to pay for the fees. And again, what does that mean? Demands. So more people using the token and the price should go up. Of course, there is a lot of risk because investing into projects that are built on their L1s are riskier, but also the gains could be better. Again, my goal here is to invest into these projects like Near Protocol, AVAX, Matic, Ethereum, and see if I could catch one or two projects that are built under that blockchain and get some massive gains. Because for example, I'm investing in Near Protocol, and what I'm expecting for next bull run is maybe a $20, $40. So that would be maybe a 20x on my investment. But now, if I invest in Refinance, I could expect 100x. So that means instead of me going and investing $1,000 on Refinance, if I make 100x, I could invest only $100. So this is how I see it. I am not investing into this risky project to not only make more money, but also to protect myself and invest less money. So for example, if I want to make 10K on Neo Protocol and my goal is to make it 10x, I go and invest $100, $1,000, or $1,000, 10x is $10,000. But again, if I know that I could be making 100x on ref, instead of investing $1,000, I can now go and only invest $100. So my risk is only $100, but the possibilities are crazy. I could be making $10,000 for just $100 investment. So yeah, so this is my quick review on the protocol. Of course, you can go and read the white paper, the documentation, try it out, and also look at the price action, the metrics. But this is pretty basic, and I'm just showing you why I love this project. Let me know in the comment section if this was valuable for you. Let me know what I am missing, what you like about the project, what you don't like about the project. And as usual, leave a thumbs up, subscribe, and talk to you later. Bye-bye.